In this video, I want to share with you my next potential trade idea for a long trade on Bitcoin and potentially also on Ethereum. So if that is something that you're interested in, both for leverage trades and for spot swing trades, this is for you. Continue watching. Now, in the previous video that I uploaded just 4 days ago, Bitcoin was trading at about 44,000 and I said we were potentially due for a short-term pullback of about 10 to 15% on both Bitcoin and Ethereum and potentially 30 to 50% on altcoins. We got the almost 10% on Bitcoin, and what is going to happen next? Let me dive into the charts and let me share with you my thoughts. By the way, if that previous video helped you out at the short-term correction call at 44K, where we dropped all the way down to 40K, smash the like button and make sure to give this page a follow or subscribe my channel if you are not yet doing so. Alright, so you can see over here, literally just 4 days ago, I said warning short-term pullback, and you can see over here, Bitcoin was trading at just about 44,000. Quick recap of what I said over here. But I am saying that we might be seeing some sort of pullback here in the near future, where we could potentially drop to 40 or 39,000. Okay, so that was literally it. I said we could drop to about 40 or 39,000, and that is exactly what happened. You can see over here we dropped to 40,280. That was a nice drop, almost 10% exactly. Now, the question is, we did bounce back pretty quickly and been chopping around a little bit. We're at 41,400 at this point. So, as promised, at the beginning of this video, I'm going to share with you my next trade idea. But first, we have to look at what is potentially happening and what is playing out. And basically, the summary of this is we are now December 13th. We are almost halfway into December. We are very close to the holiday seasons. This is usually the time when the rest of the world just kind of winds down their operations. Institutions, banks, funds, they take off. Usually already earlier than this, but definitely going into Christmas, into New Year's, and the overall market conditions change. It becomes a lot thinner liquidity. There's a lot less participants in this time, and it's usually generally just for active traders, not a great time to trade. So people just take off and come back sometime in January. So that kind of leads me here. Also with December here for Bitcoin and for crypto, we got this pullback, and this is a good thing because we basically went up here from 26,000 all the way up to 44,000. That is a big move, okay? That is what is it, $18,000 move without any sort of correction, just a grind up and a massive move up, and it is due for a bit of a correction. The fact that we are pulling back now is really good in my opinion, because if we just continue going higher, if we went to 48 or 50 or higher than that in one go, it's much more likely that the Fibonacci golden pocket, which is between that 48 and 53,000, would act as a larger resistance. The trend would run out of steam and we would probably see a larger correction if that had happened. But now that we are seeing this correction from 44, assuming that the bullish trend continues, of course, then we are basically resetting the indicators. All the overbought short-term conditions are kind of getting reset. And my theory would be we'd hang around here between 1 to 3 weeks, because that is usually what happens in previous corrections. In bull markets in 2020, the same thing happened. 1 to 3 weeks, a pullback, kind of hanging around. And that lines up with, over the holidays, really not too much action. Maybe towards the last couple of days of December, heading back up to get a green monthly close in December. And then things are really still lining up for potential ETF approval in January. We don't know for sure if we're going to get that, but things are looking good. Google just changed their ads policy to allow crypto funds to start advertising, so that is promising. And then, Bloomberg analysts have said 90% approval chance of the ETF in January, which would mean this is perfect timing for the correction because it allows everything to cool down a little bit before that potential ETF approval, where and that's one thing I'm going to show you now. I also covered it in the last video. The CME Gap on the CME chart, just under 40,000. If that gets filled, it doesn't have to, but if it does, it would be pretty good, because then we can just continue higher, potentially from January all the way up to the halving, or maybe even a month or two after. And one thing you have to understand also, April/May, also in 2021, ended up being the top. So if we go back here and we zoom out a little bit, we change this to a daily chart, you can see over here, this was, you can see 14th of April was the high. The halving is around about the time of the halving. So what if the ETF gets approved in January, Okay, we've had our correction now. We just continue to rocket higher. And maybe even by the time of the halving, what if we're back at the all-time high? What if we're around 70,000 by the time of the halving and people get super euphoric because they think, you know, we haven't even started. We barely had the halving. Usually previous cycles have peaked 12 to 18 months after the halving, so that would be insane, right? But what if the bulk of the bull trend is already behind us at that point? What if the Fed starts to cut rates sometime around there? And you know, maybe we have one crazy month where it goes from like 70K to 100K as a blow off top. Everyone gets super excited, and maybe by May it tops. I don't know, but you can see over here what happened in 2021. So depending on the price action leading up to that point, that's still like 4 or 5 months away. We'll see closer to the time, and obviously I'll continue to update, so make sure you are subscribed to the channel below. Even better, if you want real-time daily updates on charts, trade ideas, and all this kind of stuff, I do that on a daily basis inside my VIP. I'm increasing the prices of the membership on December 28th, so there's literally less than 2 weeks left. If you want to join, come and sign up. The link is in the description down below. You get a full 60-day unconditional refund period, so sign up. There's no risk. You lock in the current membership prices before they increase, and if you change your mind, you can simply request a refund within 60 days. And inside VIP, you get access to me and more than 2,000 of our members inside the Discord, where you can ask questions, you get those real-time trade setups, and so on and so forth. So if you want the best setup, the best guidance, the best ongoing mentorship, and the best chance of success with crypto, come and join us in VIP. The link is in the description down below. Okay, so let me switch over to the CME Gap, okay? This is the first thing. You can see over here, CME Gap, CME charts, it's a futures. It doesn't trade 24/7 like Bitcoin does, like Bitcoin spot. This is actually closed every single day and on weekends, which creates these gaps because Bitcoin trades 24/7 and this one doesn't. So if there's a difference in the price between the time that this closes and the time that it opens again over a weekend or over a day period, then it creates these gaps, and these gaps tend to get filled, as you can see over here. This gap got filled over here, this gap got filled over here, this gap got filled over here, and now we have this gap over here between 40, and it would be filled at about 39.3. So we have obviously not yet had that close, and the whole idea here is, if this does get filled, it needs to be during a time when the markets are open for the CME trading, which means it can't happen on a weekend because then there is no activity on this chart. So it needs to be during trading hours during the week that this gets filled, and we need to see it go ideally to about 39.3K, maybe a little bit below, and that was the idea all along. So while we have dropped to just a little bit above 40,000, we haven't closed the CME gap, which means there might still be a little bit of a leg down coming. And like I said, I expect this correction, this consolidation, to take between 1 and 3 weeks, simply because that's how it did it in the past also. But it is also the holiday period, so there's probably less action here. So I wouldn't be surprised to see it hanging around for another 1 or 2 weeks. And like I said, maybe if we close that gap, then maybe just after Christmas or so, start to run back up, so the monthly candle looks good, closes green for December, and then continuation in January. That is still the idea, and the target is still, in my opinion, at least this Fibonacci golden pocket here, this high and this high. So that's between 48, but maybe even as high as 53, and potentially we could see that in January or February. If we get an ETF approval in January, maybe it happens right away in January. That is completely a possibility. Okay, so with that information as the background and the base of the next trade setup, then let's take a look at the liquidation map. Now, the liquidation map, I've made a complete video training and tutorial even here on YouTube. It is completely free, so if you want, have a look at the link in the description. It's also in the trading course and the VIP members area. And this basically just shows where the current liquidations lie. And as you can see over here, this one, by the way, is free on CoinGlass. You can see here the daily liquidation map. You can see over here there is still a cluster going all the way down to, what is that number? Just about 39.1. What is the number that I just said for the CME gap? 39.3. So basically this perfectly lines up with, if we were to get a drop to into the low 39,000s, it would clear this liquidation cluster of basically people betting long, but too early already. So first, are we going to get that drop? It clears all of them out. It fills the CME gap. And that is what we're looking for as the base of the next trade idea, because if that is what is going to play out, obviously no one knows, but this is the idea, right? This is what we're betting on. So if that plays out, we get the gap fill, we clear these liquidations, and we get the setup that I'm about to show you, then it might make a chance for a potential long entry in the 39,000s, maybe the low 39,000s, that could then, if the bullish trend continues, ride all the way up to potentially 48,000, maybe even 53,000, which would obviously be a very, very nice ride, because that could potentially then be almost a $10,000 move to the upside with a relatively short stop. I will share the setup with you in a second, but basically that could be really good for a leverage trade. If you know how to snipe this on the lower time frames, you can have a really tight stop with higher leverage, but you can also take a bit of a lower leverage trade, you know, maybe where you're doing a 20x or a 10x or a 5x leverage, but you still want to ride this trade potentially to the upside. By the way, if you are looking for a place to trade with leverage, check the links in the description down below, both BYBIT and BitGet. I've got referral links for them. If you use my referral link, you get the maximum deposit bonuses for new time users. So if you don't have an exchange yet and you're looking for a place to trade, personally, I think those are good places to trade, and I'd appreciate it if you use my referral link down below. Now, you can also see, if you look to the higher side over here, there's up to 658 million to the long side and only a very small amount to the downside. Now, this might not be 100% accurate. So what I would like to see is first get all of these longs cleared, fill that CME gap, and then run it all the way back up to clear all the shorts that are betting on this being a complete top and Bitcoin dropping back to low 30,000s, who are all shorting this, while the only objective was to fill that CME gap, clear these liquidations, and then run it back up, and even higher than that, potentially 48 to 53,000. Okay, so now with all of that out the way and the full built-up base and theory behind this setup, let's get to the actual setup. So you can see Bitcoin is currently 41,462. Now what we have here is, after this drop, we made this wick. We haven't yet swept the wick low. So this is where the range setup comes in, and I've already drawn it out. So let's make it easy over here. You can see this range over here, from the low to the high over here. What we are looking for is a sweep of the low, right? We want to see Bitcoin sweep these lows. It hasn't yet done so. It is in the middle of the range. It is not a good point to take a position here. It can chop around, and people are making all sorts of bets here on directions, but the best is just to wait for one of the extremes. So maybe even if it goes to the upside first, then there's a potential short here still down. But if it goes down here first, which is also possible, we just have to wait and see whichever extreme it takes. But this is the setup that I'm looking for. A sweep here of this wick low into that CME gap. So you can see we don't know exactly how low it's going to go, but below 40,000, the CME gap 39.3, you can see the liquidations 39.1. It might overshoot it a little bit, right? Maybe it goes a little bit less. The trigger and entry for this trade setup is sweeping that and getting back above this range low, this wick level at 41.2. So don't take any action until it sweeps it, until the downside, and when it reclaims it. And at that point, we can take a long position with a stop loss at wherever that wick low ended up being, whether it's 39.5, 39, whatever it ends up being. And the target would be at least this range high, but very probably a continuation. And my next target for the bullish trend continuation, like I said, Fibonacci golden pocket at around 48,000. So that's a 1 to 7.5 the way it's drawn like this. Potentially, what if it even runs over 50, maybe to 53, which is the 0.70, but let's say 52. You can see that's a 1 to 11 risk reward, meaning if you took this trade, you're risking 1 to make 11. Okay, so if you're risking $100 to make $1,100, $1,000 to make 11,000, 10,000 to make 110,000. This is an incredible risk reward if it plays out. This is a very proven setup also that has a high probability of playing out. Again, there's no guarantees in trading, but this is the setup that I'm looking for. The higher time frame trend is bullish. I've explained the theory behind this trade with the CME gap fill, the liquidations, the higher time frame bullish trend, and continuation towards the higher time frame target, which I believe is 48 to 53,000. So if we get the setup, it sweeps it, we have to wait for the reclaim. It can't just sweep it and then you take a random long. You can't. Okay, that is not giving us an entry. It needs to sweep and reclaim, and at that point we can take a long with a stop there, risking 1% of the trading account to potentially make 11% if this trade plays out. And obviously at any point you can move the stop to break even once it's entered, or you can take profits at 1 or 2 or 3 or 4R, wherever you want along the way. And this is the idea that I'm looking for and the conditions how to enter. Now, since we're here anyway, that similar trade setup is probably going to play out on Ethereum as well, since the whole market tends to kind of move together. So Ethereum also, we had about a 10% drop, and 2150 was kind of what I was looking for, because that's the original breakout. As you can see here with this original line, we had a drop below this on a Binance perpetual charts. It went to 2111. So it has also created a range, as I've just described on Bitcoin, and we are simply also ideally looking for a sweep low of the range for a long entry, sweep of that low, then we enter and reclaim of the range, wherever that low is going to end up being. We don't know what it's going to be until it actually sweeps and reclaims. We put the stop there, and then the target is continuation, at least these highs, but probably higher. And you can see that might even give you a better risk reward in terms of the setup on Ethereum, potentially being cleaner here. And the ultimate target here still for Ethereum is actually about 3,000 in my opinion. So if this setup plays out in this way, that would be an insane risk reward. You can see even to 2,900. What is that? A 1 to 40 risk reward. That is absolutely insane. And it is possible. Okay, so we'll have to wait and see. This is just an idea here. And the Bitcoin chart is a little bit cleaner because of the levels are easier with the CME Gap and the liquidations over there. This is what I would look for here on Ethereum, but we'd have to wait and see how low it would go on that sweep. And again, the condition here for the entry would be a sweep of the low and a reclaim before taking along with a stop at the lows. As always, you only risk 1% of your trading account on this, but if this plays out in this way and you make 40% for a 1% risk, that would obviously be absurd. You can take obviously the same trade with spot, right? It doesn't have to be at 100x leverage or 50x or 10x or even 5x. You can literally take this with spot, so there's no liquidation risk, meaning you just buy spot Ethereum with your USD or your USDT and ride it up, in which case obviously it would be a different profit, because then you would be making whatever the percentage gain is. If you're buying spot and Ethereum moves 10%, you'd only make 10% on whatever you're buying in with, right? That's the power of leverage, where it can increase that, but that works to the upside and the downside. Anyways, this video is already long and it is pretty technical here. So for those of you who are beginners, who are confused about all the stuff what I'm saying here, I explain this all in massive detail from scratch, step by step in my VIP. I created literally a 50 lesson video training course about trading, about all these setups, how to read charts, all the things I'm talking about here that might be going way over your head at this point in time. But if you want to learn more of that, come and join VIP. Okay, the prices are still currently locked in until December 28th. Then they are increasing permanently. So the best time to join is now. The link is in the description below. You have no risk. You can sign up. If you change your mind within 60 days, email support and you can get a full refund. Okay, but you can learn everything here that I know about trading. The entire trading course is just one part of what you get. There's a crypto beginners course. I write a monthly newsletter. There's monthly video updates. There's all sorts of special reports. And of course, you get access to the Discord. It's a chat group where 24/7 you get access to me and 2,000 other members, more than 2,000 in the group. You can ask questions in there. I share these kind of things that I just made this video about, but in real time. I share what I'm looking for, when that changes, when the conditions look good, when they don't look good. And you can ask as many questions as you want. And it is really, really, really worth joining. And I'm so confident in that. That's why I give the 60-day money-back guarantee. If you're not happy, simply get a refund. But the prices increase permanently on December 28th. They go from $1,997 for lifetime access to $2,997. So you literally save $1,000 by joining now before December 28th. Link in the description down below. If you enjoyed this video, please smash the like button, subscribe to the channel, share it with a friend who could use it or multiple friends, and I will see you in the next video.